Welcome back. Then let's take a look at how the markets have performed. Then it's been positive tilt across the board then, and seems positive across the board, even though we have volatility because, of course, of the US election picture. We don't know where things are going to go exactly, but for now, it seems that everybody's taking in a sense of positivity. So more than 3% gain for the Hang Seng out in Hong Kong, 1.7% higher for the Nikkei index as well in Japan, while we're seeing the Shanghai Composite in China go up 1.3%. That picture has filtered right through into the European market, and also green across the board on that front. The FTSE 100 0.4% to the up as well on that front. The DAX sitting 1.5% stronger also, so positive picture there. All of this has also meant that even emerging markets like ourselves have managed to gain quite prodigiously. Just below 55,000 points is the JSE All Share, 2.33% stronger in fact at this lunchtime trading picture. Some of the big gainers on this front, well, the industrials have gone up 3.5%. Of course, Naspers is within this mix, and once that begins to gain, of course, you kind of see a big market picture gain. Of course, that comes out on this front because Naspers does have a holding in Tencent, which is listed out in Shanghai, so better pictures there. Alibaba also gaining, so it means that the tech stocks have certainly enjoyed some sense of positivity there. So more than 3.5% up for the industrial shares over there, with gold miners both going up and platinum miners, should I say, 5% higher for the platinum mining shares to nearly 3% for gold mining shares. So resources were bound to go higher today. Certainly a much better picture for them over there, although diversified miners perhaps not doing so well, 1.25% higher. The financials have also ticked on to the good, 1.33% stronger there, following on from exactly what the banking stocks have done. So they've shared a similarity out on that front. The listed property sector also doing very well today, 1.23% to the good. In terms of stocks that have certainly helped this picture go all green, well, Life Healthcare has gone 23.2% to the good. It now sits at 20 Rand and 80 cents a share. Steinhoff Investment also 8.3% higher. RDI, a better picture for them too. In terms of negativity, we do have a few. As I said, the diversified miners not necessarily enjoying the uptick today. More than 2% down is Anglo. At this point in time, around 207 Rand a share out on that front. Zeda Investments also taking a bit of a hit, 2.5% weaker. Onto the commodities board then, Brent crude has taken a little bit of a hit, but let's remember that of late it had been sitting even at around $36 a barrel there, but so much better for now as it does sit at $41.13 a barrel there. But it seems that there is demand then across the board, particularly for some of the metals. Then platinum going up 1.8%, still below $900 a fine ounce though, so not really too much to write home about. Hopefully the gains are consistent. It will depend on demand on the global front, with the gold price also going up at 1917 there, $1,917 a fine ounce. Onto the currency, well, slightly better, but we're staying below that 16 Rand mark, the best figure since early March, that is, right? And just how much better can the Rand go is perhaps the question. Will it depend on a democratic victory out in the United States? And if Donald Trump does win, what changes happen here? Let's discuss that in a moment or two with our analyst. The euro, should I say, is at 1866. Then that's how much it'll cost you to get one of those, while a quid will set you back 20 Rand 65 cents. Roy Mutoni is from Absa Asset Management and joins us right now. Then Roy, thank you so much for your time. Appreciate it, joining us via video link. Let's get a taste then. The market's certainly taking in a sense of positivity. One would have thought that because we're not sure where this US election is going to end up, perhaps you'd get a sense of volatile trading, up here, down there, red here, red there. It seems all green though. Where's that coming from?
It's actually quite interesting. You're absolutely right. You'd expect a bit of reticence, but I think what you're seeing here is multiple drivers. The first one is around the strong Rand, supporting local currency denominated stocks, SA Inc. as such. And then the second one is the fact that your palladium, platinum, commodity prices are up. The basket prices are up, which is positive for the commodity companies as well. And then globally, there's the push towards the megatech stocks, which will be supported by lower regulation in case of a mixed government, so a Republican Senate and a Democratic president. So it's actually working in tandem with exactly what we're seeing on the ground.
Yeah, it gets I suppose very interesting for any analyst who sort of looks at this now and thinks to themselves, well, any bet I make even right now still might not come to the fore because you just have a lack of certainty. Does that lack of certainty help the market in terms of giving the right answer at a later stage, perhaps just being patient? Should that be the call for investors right now?
So the market lives off narratives, and the narratives before today were around a blue wave and Democrats spending and Democrats expanding on fiscal spending and relying less on monetary stimulus. Where the narrative has gone now is that you'll have gridlock. So the likelihood is that in the US you will see a lot less being done, a lot more monetary stimulus, a lot less fiscal stimulus. And markets seem to like that because it's a lot more predictable, because you're not going to have a lot of regulation happening. The dollar remains weak, which is positive for EMs. The likelihood is that the megatechs don't get impacted by regulation. So that's positive. And I think that's what market players should be thinking about right now. Where do you find your incremental return? You'll find it in stocks that have sold off, stocks that haven't recovered yet. Places in like emerging markets, and South Africa definitely fits into that story as well.
Talk about South Africa fitting into that story. The local currency dipping below 16 Rand, staying firmly there, even around 15 Rand 80 odd against the US dollar. This is a good thing, really. But is that fully dependent on a democratic victory out in the United States, or is this just based on the volatility that happens out in the United States because we're seeing US dollar weakness?
Yeah, this is all about dollar weakness, purely and entirely about dollar weakness and the likelihood that you continue printing dollars. That's it. I don't think there's anything here that's reflective of local conditions. It's reflective of where the dollar is, and we derive our value from that. So no real surprises. It should maintain current levels. Remember, we also have relatively high interest rates, so a solid carry. The carry is not actually helping. Well, the carry is not actually functioning in that we're not attracting foreign funds, but in case foreign funds start looking for yield, this could be one of the places they see.
Yeah. All right, very quickly, let's get into some equity news on the local front. Despite all of this, there is actually some other stuff happening. TFG reporting a set of results for them. Look, it's still going to be a hard slog. Even though they've just bought jet stores from Edcon, it's still not going to be easy going, right? Things are still going to get very difficult for them.
No, I think, but this management team has been able to pull one out of the hat. First thing, they've managed their gearing incredibly well, reduced it substantially. They've managed their exposure to credit incredibly well as well. And then that jet acquisition is additive to top-line revenue. So the result was pretty much in line with what people were expecting. The outlook marginally better. And I think it's a trend that you'll see across the SA Inc. stocks. Not as bad as people expected, and outlook not as bad as we are thinking.
And what about Dis-Chem? I mean, there've been quite a bit of interest with regards to Dis-Chem's numbers because, of course, throughout the lockdown, they've been quite important, right? They've been an essential service as well, and one can imagine that they've continued to trade. Have things been sort of shown in their numbers as well? Have they had that sense of positivity?
Oh, absolutely. They were able to open stores during this period. They were able to grow margins in both wholesale and in retail. And you're seeing a little bit of turnover growth coming in. They had an element of self-help in the sense that they improved their working capital and their return on invested capital. So it's been positive for them. And I think you're seeing with a higher share price today, the market beginning to re-rate them and beginning to have a better view of the management team and the outlook for the business. Definitely the performance during lockdown was positive for them.
Yeah. Gets very interesting there. Thank you so much for the time, though, Roy. Appreciate it here this afternoon on Point. Roy Mutuoni is from Absa Asset Management, joining us here on SABC News, getting to grips with that market picture. The US elections will definitely be a precursor to where markets go. Everything from trade policies to local currency policies, even intra-Africa trade negotiations could be slightly different. Of course, certain accords may even be taken on of a different kind, even though the US has now officially taken themselves out of the US Paris Accord. 253 to 214. That's the state of the US election at present. 270 win. Joe Biden is closer to that mark, but the way permutations are panning out, it could go in any direction. Still too close to call. But let's shift our attention then to the labor market. My colleague Mbongeni Mutwa is indeed standing by the labor force segment then today. It seems that a lot of discrepancies have happened throughout the COVID-19 pandemic.